Space is a war-fighting domain just like land, air, and sea. That was Donald Trump's line in 2018. People laughed. Late-night hosts mocked it. Memes flooded social media, and Space Force sounded like a joke. But he wasn't talking about aliens or science fiction. He was describing the system that holds the modern economy together, and how easily it could break. Every transfer, every trade, every flight path, every oil shipment depends on satellites. If they stop working, global time stops with them. Back then, nobody thought about it. Now, in 2025, every serious investor does because orbit is no longer a frontier, it's infrastructure, the backbone of banking, logistics, navigation, and data. It's where the world's wealth actually lives. When Trump said those words, he wasn't predicting war. He was pointing at the weakness every major economy was already hiding: dependence. A few thousand machines circling above Earth keep $100 trillion in global value synchronized. They guide oil tankers, timestamp trades, and keep airplanes from crossing invisible lines. If those machines fail, the economy fails. It started quietly. A satellite blinked out for half a minute. A GPS signal drifted. A trading algorithm misfired because of timing errors. Each incident looked random until insurance firms began recalculating risk. Premiums for satellite-based industries doubled in a year. Investors called it orbital volatility. That's when markets realized space wasn't about exploration anymore. It was about exposure. By 2023, even central banks ran simulations. What if orbital timing failed for 1 hour? The results never went public, but leaks said global GDP could drop by 2% before markets reopened. 2% in an hour is catastrophic, and nobody has a backup. You can duplicate data, not satellites. Meanwhile, the technical malfunctions kept happening. A private communications network lost contact with 3 ground stations. A European weather satellite veered slightly off course. Officials smiled for cameras and called it solar interference. But analysts tracked the numbers. Each glitch caused microshocks, freight delays, price swings, hedge funds repositioning billions. The economy was vibrating to the rhythm of invisible events in orbit. Then came the weapon tests: China's debris removal arm, Russia's anti-satellite missile. Both justified, both condemned, both profitable, because every test made defense stocks surge. Investors stopped fearing conflict. They started trading it. A new term entered Wall Street's vocabulary: the space defense economy. By 2022, the U.S. Space Force wasn't a punchline anymore. It had a $25 billion budget and partnerships with corporations bigger than some nations. Contracts worth billions flowed into private aerospace firms, companies whose valuations were tied directly to tension. Conflict had become an investment strategy. In 2023, a commercial satellite failed over the Pacific. For 97 minutes, GPS networks in Asia flickered, cargo ships drifted off automated routes, global shipping indexes fell, and billions evaporated in derivatives before anyone confirmed what happened. The official report said, software error. The unofficial truth whispered through the markets: targeted interference. That was the moment the financial world accepted what the military already knew: orbit is contested. By 2024, at least 6 satellites had been deliberately jammed or blinded. No one claimed responsibility. No one retaliated publicly. But markets reacted faster than governments. Gold spiked, cyber insurance rates exploded, defense ETFs hit record highs. Every signal loss became a trading signal. That's the paradox. The same fear that threatens collapse now fuels profit. Economists started calling it orbital risk pricing. Banks literally modeled how much a satellite failure would move interest rates. Some funds now hedge against space events, like they hedge against hurricanes. It sounds absurd until you remember that one failed satellite can freeze half the world as logistics data. Trump's quote keeps resurfacing in investor meetings now. He said, warfighting domain. But what he really defined was economic vulnerability. Everyone who laughed at him is now building financial products around the fear he described. Governments talk about defense, corporations talk about redundancy, but it's the same thing: survival. Each launch window carries both a flag and a balance sheet. Each satellite isn't just equipment, it's collateral. Destroy one, and it's not just a national loss, it's a $1 trillion shock. Every month, the crowding gets worse. Thousands more satellites, tighter lanes, higher risk. A collision today could trigger the Kessler effect, debris destroying debris, cutting the planet off from its own data stream. Economists have modeled it. If orbit became unusable for even 1 week, global trade would fall by 40%, airlines would ground fleets, digital banking would desynchronize. The market wouldn't crash, it would vanish. Private investors know this, but they keep funding launches because the profits are immediate and the danger feels distant. It's the same psychology every bubble has, except this time the bubble is 36,000 kilometers above Earth. Every rocket launch is a bet that nothing will go wrong, and every bet makes the system more fragile. Now the phrase space dominance isn't about pride, it's about survival of capital. Whoever controls orbit controls currency flow, communications, surveillance, and therefore power. And that race is accelerating. Faster launches, more private fleets, more classified experiments, more money chasing a sky that's running out of room. In boardrooms and trading floors, the fear feels quiet but constant. Executives ask, what if GPS goes dark for 10 minutes? Analysts run models that end in zeros no one wants to read aloud. The silence after those meetings isn't relief, it's calculation. They're already planning where to move money when the first failure hits. Across different agencies, orbital data is flashing warnings that don't match any known pattern. Unregistered signals, moving lights, new frequencies, cutting through restricted bands. Traders follow those anomalies the same way generals do, both guessing what happens next. Each unknown shifts billions. Each unexplained signal becomes a rumor, and every rumor becomes a market move. Inside control rooms, operators watch the screens in total focus. A single flicker can mean interference, a glitch, or an attack. They log every second, pretending it's routine, but everyone feels the same pressure. Something is building. Systems are still running, trades are still clearing, launches keep climbing, but the stability feels thin, like glass under strain. Somewhere, another alert pops up. No one announces it. They just note the coordinates and keep watching. The room is silent, except for the hum of servers and the ticking of synchronized clocks. The data keeps streaming, steady for now, but everyone knows what silence usually hides. Governments and investors are no longer asking if space will affect the global economy. They're asking when. In 2025, the number of active satellites has passed 10,000, more than triple the total just 5 years ago. Every one of them carries value measured not in kilograms, but in billions. Together, they generate data that feeds trading algorithms, logistics networks, and national security systems. The crowding has created a new kind of risk market. Insurance underwriters now price orbital collision exposure. Banks quietly buy space disruption hedges, contracts that pay out if communication networks fail. It's an industry built on the awareness that a single timing fault in orbit could ripple through the entire global payment system. The warnings are no longer theoretical. In the past 2 years, small outages and signal drifts have already tested the system's limits. A few seconds of GPS error delayed container tracking at major ports. One mistimed trading sequence briefly moved hundreds of millions of dollars. Each incident was contained, but analysts note the pattern. Frequency is increasing, tolerance is shrinking. Behind closed doors, policymakers discuss orbital contingency. The phrase covers everything from redundant fiber routes on Earth to backup constellations in lower orbit. It sounds technical, but the stakes are human. Air traffic control, hospital networks, energy grids. If those timing streams stop, life on the ground slows with them. Investment follows fear. Global spending on space security infrastructure has doubled since 2022 and now exceeds the annual budgets of most nations. Private companies advertise space resilience platforms, promising continuous data even if major networks fail. Venture capital calls it the next internet boom. Risk managers call it a race against physics. Every new satellite adds profit and danger at the same time. Crowded orbits mean more data coverage but less margin for error. A single collision at high altitude could scatter debris that lasts decades, forcing insurers to rewrite global risk tables overnight. That possibility is already priced into long-term bond markets, proof that investors understand how fragile the sky economy has become. Meanwhile, the conversation about regulation lags behind technology. Treaties written during the Cold War never imagined private constellations numbering in the thousands. No authority can enforce traffic control in orbit. Each nation relies on voluntary coordination. It's efficient until one party stops responding. And that uncertainty, who owns responsibility, who pays when things go wrong, is what economists now call the orbital governance gap. For financial systems, that gap translates directly into cost. Insurance premiums for satellite operators have risen more than 60% in 2 years. Large telecoms diversify their fleets across multiple altitudes to spread risk. Even consumer finance feels it indirectly. Higher transaction fees, slower confirmation times, tighter network security. The space economy may look distant, but its pressure is already built into the price of everyday stability. Strategists warn that space conflict doesn't have to involve weapons to create chaos. A well-timed cyber intrusion on satellite control software could desynchronize global navigation or spoof market-moving data. That is why central banks and defense ministries now share intelligence more often than ever before. Finance and security have merged into one conversation. Still, cooperation is thin. Nations guard technical details the way banks guard customer data. Every upgrade, every new satellite launch becomes both a commercial milestone and a geopolitical signal. Trust is fragile, and mistrust costs money. Analysts at the European Space Agency estimate that by 2030, the orbital services economy could top $1 trillion a year. But behind that optimistic number lies a warning. Half of that value depends on uninterrupted signal integrity. There is no physical substitute for those satellites. Once access is lost, productivity drops instantly. That's why the tone in industry meetings has changed. Executives who once spoke about innovation now talk about containment. how to keep the system alive if part of it dies, how to rebuild faster than disruption spreads. They speak of resilience layers, distributed constellations, space redundancy bonds, financial language for technical panic. For ordinary people, these terms sound distant. But the moment navigation fails or digital payments lag, the reality becomes personal. The invisible network above us isn't science fiction. It's the nervous system of modern life. And like every nervous system, it can suffer shock. Every nation understands the risk. None can afford to stop. The race continues because slowing down means falling behind, and falling behind means dependency. So the launches keep coming, faster, cheaper, closer together. The sky is profitable and profit never pauses. Analysts call this period the orbital rush. It feels like the early internet, open, chaotic, unstoppable. But unlike the internet, when something breaks in orbit, it stays broken. Debris doesn't delete, it drifts forever. That permanence is what keeps economists awake at night. The financial world has built redundancy for almost everything, except the sky itself. You can hedge currency, insure ships, secure servers, but you cannot replace orbit. Once access narrows, every system below it feels the strain. The question is no longer whether space will test the economy, but how much damage the first real test will cause. Markets are already signaling the answer. Volatility indexes tied to aerospace and defense reach new highs every quarter. Fear has become a measurable asset class. Trump's old line. Space is a warfighting domain. Sounds less like rhetoric now and more like policy shorthand. Governments quote it when approving budgets. Investors repeat it when explaining portfolio shifts. What was once a joke has become the foundation of strategy. Space isn't only where nations compete, it's where economies balance. Every satellite, every launch, every line of code is another thread in a web that holds modern civilization together. And everyone involved knows one simple truth. The higher the network climbs, the harder the fall if it slips.